Hey everyone, Dave here talking to you today about how to diversify your income. And really, this has never been a more important topic. We know this has always been true, but well, it hasn't always been true, I guess a couple hundred years ago. But today, the world is absolutely changing very quickly. AI is super disruptive. It's going to continue to change the nature and types of work that are available to people, and relying on working for somebody else as your only source of income is really an increasingly risky strategy. And so today we'll talk about the other common ways to diversify your income and some very high level considerations within each so that you can make a decision on how you choose to diversify your income. So the six most common income sources that we have are working for someone else, investing in stocks and bonds, commodities, other things, investing in real estate, simple side hustles that we can go out and easily get or do, and then finally building a business or buying a business. So let's dig into them and go through kind of some of the key considerations. And we'll look at them in the context of how much short-term risk is associated with this strategy, how much long-term risk is there, how much personal time you need to dedicate to each of these, how much money you need to get started, and then finally the timeline or time frame that's required to build meaningful wealth in this space. So working for someone else. Short-term risk, really, if you're young, there's very little. There are a lot of jobs out there for people who have the ability and willingness to show up somewhere and work and use the skills that they have, for sure. As we get older, you maybe have specialized skills. You've only worked in one specific industry, or it's an industry that's vulnerable to job loss by AI. The long-term risk to relying on this approach for your income becomes very high. Time, obviously, we're trading dollars for or hours for dollars, and so most places want you to show up 40 hours a week or something close to that, maybe more, depending on the type of job that you're in. Capital, usually the money's just flowing your way. You may need to go buy specific kinds of clothes. You may have other, maybe there's some places that you belong from a networking standpoint or other things that might be considered a job expense, job-related expense. But for the most part, little to no capital required to do this. And then time frame to build meaningful wealth. This takes time. Working for someone else is not, in general, a get-rich-quick scheme. And it's certainly the kind of thing that we need to spend a long time at if we're going to build significant wealth. Investments. In the short term, risk is very high. Markets are volatile, regularly experience declines of 20% or more. We saw one this is 2025 that I'm recording this. We saw one as recently as April of this year. And so it is not uncommon to have these kinds of dips. However, over the long term, there have been very few 10-year periods in the market that stocks have been negative, and there have been no 20-year periods. So a lot of that risk is kind of zeroed out over time, and we can expect long-term returns from the companies that make up these indexes. Personal time, there's certainly a learning curve on the front end, but time can be very little. If you're using a simple indexing strategy or working with a robo-advisor on one of the major platforms or working with a financial advisor, if you're doing that either just for investments or to help out with financial planning. Capital, very little to get started. Many platforms have a zero minimum. So for as little as $50, you can be in there buying some ETFs at that price point or go the fractional shares route and really get started with any amount of money. Time frame, again, this is not a get rich quick approach. It's generally long. If you are at a stage where you have your emergency fund fully funded, your retirement fully funded, and you have a speculative bucket of, say, 5% of your investable assets, every now and then we can bottle lightning and land on an investment, say looking at Bitcoin 6 or 7 years ago would have been an example of this. Some tech companies, say in a 10-year period, are examples of this. But again, in general, this is a slow and steady approach to wealth accumulation. Here's an example of that. So let's say you have an extra $500 a month and you put that, you're 30 years old, you put that in a Roth account every year, so $6,000 a year. Your total contribution there would be $210,000, and you do that every year for 35 years. For your $210,000 contribution, and assuming an 8% growth, that Roth will grow to $1 million, which is absolutely fantastic. And again, is a testament to how these things can work over long periods of time. Real estate. Short-term risk we'll call moderate. Big real estate crashes are more rare than big stock market crashes. Again, if you do your homework and buy appropriately, even if the underlying value of the property is decreasing for a short period of time, you can always generate positive cash flow when these things are purchased correctly. Long-term risk, very low. Real estate has a very well-established track record of long-term appreciation, and again, along the way, kicks off income and gives you tax benefits. Personal time, in my opinion, very high, should be very high to educate yourself in this space and figure out what kind of property you're going to buy and what market that's in and what your model is, whether it's a rental or a short-term rental or flipping, whatever the case may be. It can be lower eventually if you end up hiring a property manager and have a really well-defined kind of buy box of what you like to buy. Capital needs almost invariably are high. You need money for a down payment, improvements, and capital reserves. You can qualify, that should be an FSA loan. You can qualify for an FSA loan via house hacking, and it can be a way to enter the space with a lower down payment. But in general, you need a fair amount of money to buy your first property and subsequent properties. And finally, again, this is another long-term approach to generating wealth. Some small areas can boom for short periods of time, but in general, real estate is a slow and steady grower in your portfolio. Simple side hustles. Short-term risk, again, very low, similar to some of the other approaches that we're going to talk about. Things like driving Uber, online reselling, or freelancing on Fiverr don't require much startup capital. Long-term risk is also low. It's the same story. You can continue doing these things as long as you find them rewarding and your pay per hour is working for you. The personal time, this is another, just like W-2 work, this is working for somebody else. This is in general time for dollars. So the time commitment is high based on the dollars that you typically make from ventures like this. But capital needs are little to none. Usually it's just your skills and the time to show up and do these things that's required. And finally, again, like many other things that we've talked about, all of them so far, really, it's a generally long timeline because you're usually trading your time to earn dollars. Building a business. This is the one of the bunch, and you can see that or tell that based on how my energy is changing here, it's the one of the bunch that has potentially very low startup costs, but the ability to get big very quickly, depending on what you do and how you do it. So short-term risk, again, can be very low. Many businesses can be started with $1,000 in a laptop. It's not true of all of them, but this business, as a financial advisor, really at the end of the day, to get started, to have a capital reserve, but I'd say $15,000 and a laptop, and I was off and running in this business. Long-term risk is variable. It depends on the type of business you create. Some things are very established, some things are very trendy, so it's hard to pin that one down. Personal time, it's high. Of course, when you're building something from scratch, you're going to have to spend time at it. So that's almost a given. Capital needs, again, can be very low. $1,000 in a laptop can be an approach here. And again, one of the reasons why I really love this one is this is, in my opinion, the only method that has a meaningful chance to build wealth very quickly with little to no startup expenses. And then finally, buying a business. We're going to really just skim this one. Short-term risk can be very low if you're buying an established business with established customers in a thriving market. Long-term risk is a variable. Personal time, high to very thoroughly investigate what you plan to buy and buy the right business for you, both in terms of its potential and your ability and willingness to either run it or find the right person to run it. You can certainly reduce your time going forward if you do find that person to run it for you, but it's absolutely an investment. Capital, it's high, but may not be as high as you think it is. If you can work with an owner to lower the initial costs in exchange for initially sharing profits. And finally, time frame. This one can be short if you have a lot of money that you can invest in it right away. So unlike the building a business from scratch, you do need that money if you want it to be generating money quickly. but it's a longer time frame again if you're on some kind of revenue sharing agreement. So just to summarize everything here in this nice chart, I don't know if I can get all the way out of the way here. We're going to try. Working for somebody else, investments, real estate, side hustles, building a business and buying a business. We'll just leave this for you as a visual. We won't go through it in detail. We love building a business because it's the only one, again, with a low capital requirement that can get you meaningful wealth in a hurry. But a lot of these other things, yes, they take long periods of time, but some of them can be very rewarding, whether it's that side hustle you love or getting a taste of entrepreneurship in real estate. The bottom line for all of us to decide is, how will you diversify your income? So that is it for today. Like and follow if you'd like to see more from me. Take care.